Hi, welcome to my next War and Markets update. Well, today was a terrible Thursday, continuing the fall from yesterday. And what is the reason for that? Well, the geopolitical situation actually turned worse because the new leader, the son of Khomeini, has laid down conditions for fulfilling the war, where he has asked for security guarantees from the US, he has asked for damages to be reimbursed by the US, and he wants the neighboring countries not to allow their bases to be used for the war. And he has again attacked civilian installations across UAE, Bahrain, and Kuwait. The war has also expanded into the northern zone with the Hezbollah from Lebanon attacking Israel. So clearly, and Mr. Trump has said that he will see the war to a finish. So clearly, the geopolitics itself got worse. Then Mr. Khomeini, the son Khomeini, has also threatened to use the Hormuz Strait closure as a leverage. And as he said yesterday, prepare for $200 oil. So all of that meant that oil again spiked up sharply today. And as I speak now, it is hovering around the 100 levels. So the Hormuz Strait closes around 15 to 20 million barrels of oil shut off supply. I know the international energy agencies talk about 400 million barrels release, but that's only 20 days worth. The US has now announced another 172 million barrels. So they'll try to keep this, but oil looks like if this Hezbollah strike also worsens and the Hormuz Strait situation stays this way, people are talking about oil hitting past $120. We not do that immediately, but all of this is add to the tension. For the Indian markets, on top of this, the situation was that the dollar continued to strengthen. The DXY is at 99 now, and hence the pressure of the rupee. The rupee went to 92.36 today, and some RBI support then brought it down to slightly lower. So all the three, it's a triple whammy for the Indian markets, and hence today you saw that the markets were down almost 1% in terms of the large cap index, but surprisingly, the mid cap, small cap, micro cap fell less. Why is that? That's because of two things. One, the banking sector was the worst performer again today, continuing from yesterday, and hence the large caps have a 30% share of the banks in the index. Second is, if you see the FII DI buying, they were almost matched. FIIs sold about 7,000 crores, DIs bought about 7,500 crores. But clearly, DIs have bought more of mid and small caps and not bought the large caps the FIs were selling. That's why you saw the large cap index worse than the mid and small cap. In fact, if you look at the 1 week return and the 1 month return, it all shows the same story, which is that the bank index has been the worst performer, followed by the large cap index. The mid cap and the small cap actually have done slightly better, but all are in the red. It's not that there are no losses or anything, it's all are in the red. So from that point of view, right, this FIS selling is not only then hurting the cash market, but it's also in the F&O market. So the put call ratios are about 90%, which means that a lot of aggressive put buying is there to prevent people believe that they were going to fall, they're buying puts to protect themselves. And the long short ratio is also down to 20-25%, which clearly indicates a very bearish outlook and trend. So on that context, well, I think this week is not going to be a great week. And if you then, I just want to point out one thing, right? Yes, investors are tending to panic and think about their portfolios, because all of this correction has meant now that around 18 to 24 months also their returns haven't really happened. But I would encourage you all to look at the fact that, look, DIs are buying mid and small caps, which means there's a confidence around the domestic economy. There's also the fact that if you look at the FIS selling also, the 7,000 crores is a net sale today, right? But if you see the breakup of that, it's actually 14 and 21, which means what? There was 14,000 crore of buying and 21,000 crore of selling, net 7,000, which means what? It means that 40% of the FIIs were actually buying and 60% was selling, and that's the net 7,000. Why I'm saying this, even in this market, with this correction and with this certainty, there are a set of FII value money that is 40% still buying. Who are these? These are long-term buyers. So that's one. Similarly, so the DI action and the FI action should give you a clue that long-term people are buying, but the short-term, both in the F&O segment and the short-term hedge funds who are selling emerging market equities and Indian equities in order to invest in the safer dollar assets, right? They are the ones causing the short-term volatility. So why I'm saying this is, so the short term is causing the volatility, the long term is still buying. As an investor, are you long or are you short term? Right? That's the question you need to ask yourself, because if you're long, do what the long term FIs are doing, do what the long term oriented DIs are doing. Thank you.